All right. Good evening, good morning, good afternoon, wherever you are on this beautiful planet. Welcome to the Inner Circle Live Asian session. I'm your host for tonight's session, Denny Allen, and I'm happy and grateful for each and every one of you being here with me this evening as we take a look at the technicals and the fundamentals because they all matter to see what we can take advantage of in the Forex market. So without further ado, let's make sure that we turn off any and all distractions, grab a pen and paper, take lots of notes. Let's continue to participate and engage. We're starting to see more and more, right? That learning curve for a lot of you is starting to shorten, and those time frames are starting to compress. We are learning some pretty cool things in this group. So if you hear me loud and clear, drop me a 1 in the chat, and let's get this session on the way. All right, I appreciate it. All right, I see the ones coming in. So let's jump out, take a look at the fundamentals, right? We see today, I forgot to bring up a Forex factor. But we saw today, right, the 23rd, we got a whole bunch of PMI data coming through, and we actually got some misses, okay? Especially out of the UK, the Eurozone, the United States. So we're starting to see some contraction, right? Some contraction. So what does it all mean, right? We come over to trading economics. We see front page U.S. private sector nearly stagnates. So it came down to 50.4 in August. Shorter market expectations of 52. So still above 50 slightly. And we see Eurozone output shrinks most in 3 years. UK private sector output falls most in 2.5 years. So let's take a look at what it means. We're going to do our best to start really breaking this down for you guys so you have more confidence in the data that you're seeing, and then trade it accordingly, right? So let's hold on 1 second. Make sure we got everybody good. All right. And we are going to go over, and I took some notes, right? Did some notes, and we are going to go to this UK private sector, right? Let's break it down, just like we did last night for risk on, risk off. Like I said, as often as we can, we're going to make sure we get these broken down for you. So, because we know those of you who have been with us for a while, it's reciprocal, right? They constantly track the data on a monthly basis, right? So what does it all mean? How can we use it to help us with our trading? So UK private sector output falls the most in 2.5 years. That was the title of the article for Trading Economics. So UK PMI report and its effect on the British pound, right? What does it all mean? So UK private sector output is the total amount of goods and services produced by businesses in the UK that aren't owned by the government, right? So there you get private sector, okay? Think of it like everything made and sold by shops, factories, and companies that aren't part of the government. Everybody understand that? Drop me a 1, easy peasy, right? Yep, yep. All right, easy enough. So the PMI value, August 2023, came in 47.9 from 50.8 in July. So it is below the expected market consensus of 50.3. So it missed target. So just breaking down the notes, right? Because we know when we read the articles, it can get kind of wordy. So what does it all mean? Okay, business activity, deepest contraction in the private sector since January 2021. Service sector took a hard hit, contracting significantly. Manufacturing decline accelerated, making it 6 consecutive months of contraction. Order and backlogs. New business inflow saw its biggest drop since November of 2022. Work backlogs decreased at the fastest rate since 2020. Right? Again, so just breaking down the article. Employment, private sector employment increased, but only slightly. The weakest growth since March. Pricing, cost increases slowed down, showing the slowest rate since February 2021. The inflation of prices charged eased, reaching 2.5-year low. All right, that's decent. Business confidence about growth in the upcoming year dropped to its lowest since December 2022. So the overall impact on the pound, PMI reading below 50 suggests contraction in business activity, which is a negative economic indicator. Ongoing declines in various sectors can dampen investor confidence in the pound. A weakened economy outlook coupled with contracting sectors can lead to a weaker British pound. So in short, the drop in the PMI indicates contraction in the UK's economy, which may put downward pressure on the pound. So in essence, the fall in PMI indicates economic headwinds, which can affect both the pound strength and the Bank of England's policy decision. All right, simple enough. Questions, thoughts, anything? Not yet. All right, not yet.
I have a
So let's
question.
talk. Yep, what's up?
How long these news um, impact British pound?
How long does it impact? Like the lasting effects of it?
Yes.
That's hard to tell,
Okay.
right? Yeah, that's hard to tell. It was a miss, right? So we saw an immediate impact, right? We saw the pound correcting today, which is why we combine the two, right? We always want to know why, right? So we see it technically on a chart that it's at some levels where we may start to see a correction, and but why? What's going to be that catalyst? So it's hard. Overall, we still have, you know, then you start to think, like I said here at the end, right? The notes that we put down, you know, it can impact monetary policy decisions. So now, where does the investor sentiment shift in regards to, okay, the Bank of England at their next policy meeting, are they going to hold rates, right? Are they going to raise it or are they going to hold? And we see that inflation, when it said in pricing, cost increases slowed, right? Slowest since February 2021, the inflation of prices charged eased, right? So we're seeing those lagging effects of the rate hikes from the Bank of England. So now when it comes to their next policy meeting, do they hike rates again by 25 basis points or do they put it on the pause? So we'll see, right? We'll see as we go through the rest of the week what's going to be the shift in regards to investor sentiment with the upcoming Bank of England meeting. We'll see. We'll see what happens. But sometimes it's hard to tell what the lasting impact will be. But we know that the pound has been moving, to the upside because of some of the inflation issues that they have been having, and people are banking on, hey, we probably will continue to see those rate hikes from the Bank of England. But we'll see how the market digests the data today, and where the sentiment goes in regards to what's going to happen at that next policy meeting for the Bank of England. So it's a great question, but there's really no exact answer in regards to how long it's going to last. You can look technically to where if we're bullish on a pound with the, when it comes to the pound against a certain pair, and say we've got an up AB boundary and we look for price to correct, well, we know where our sweet spot is. So once it gets to that sweet spot, we take a look, we evaluate things and say, hey, it may be time now for that correction to come to an end, and we start to move along that C to D push. If our overall bias is still going to be bullish on the pound, right? So great question. Any other questions? All right, that's it. Okay, so let's look at the S&P Global US Composite, right? So just trying to simplify things, right? It's like a healthy checkup report for the US economy, focusing on both manufacturing, making things, and services, doing things for others. A number above 50 means the economy is doing well and growing, while a number below 50 suggests it's not doing so hot, which is what we just saw with the pound. So PMI value August, PMI came in at 50.4, missed the market expectations of 52. Okay, because when we talk about expectations, they start pricing things. They're expecting things to happen in the future, right? So it's below what the market expected, right? And so they start to price in expecting certain thing to occur, and then when it doesn't happen, that's when you start seeing the corrections technically, on your charts off the time. So business activity, weakest rise in private sector activity since February. Manufacturing contracted further. Services saw growth, but at a slower rate, right? So JC, what's up?
Hey Benny, how you
Hey.
doing?
Great. How are you?
Good. So when you said that they price things in, is that the overextended 80/20s that we've seen in the S&Ps?
Oftentimes, I believe so.
Okay.
Right? Because you're going on that run, they're pricing things in because they always want to try to forecast where the market is headed. That's why when we talk about like central bank meetings and we say, okay, well, the expectation is 25 basis points or 50 basis points, right? And if they come through with that, it's no surprises. They've already been pricing that in, expecting that. They've already been adding those positions, right? Because you gotta buy low, right? Because the sentiment is gonna push that price up. So you want to get in low and you want to take that ride, right? It's trending up. But when there's concerns, right, in the market or something misforecast, it's like, let me pull this out. Why? Because
Yeah.
everybody's gonna start to sell. I've got to get the bag, right? So like I'm running, I'm going back to cash, or I'm moving into something that's safer for the time being, right? So just think of it like that when you're thinking along the same lines, right? So it's like combining those technical zones that we trade with the fundamentals. Think of it like, when I get to that 61.8 zone, that 786 zone, it's that the low prices, that the discount where we've got some buyers perched. And when we get to those D extensions and when we get to those 127s, right? Is it time for them to take the bag? Like they've made their money. Is it time to pull it out and wait for a discount?
Okay.
You know what I mean? It's like blowing up a balloon to its max and then letting the air out of the balloon. Right? You let the air out of the balloon, and then when you let it out, what can you do? You can blow it up again. Right? But it gets to a certain point where you can do what? You can't put any more air in the balloon, right?
Yeah.
It's as high as it's gonna go. You've inflated it as much as you can. So now there needs to be some relief. Right? And then we can start pushing air into the balloon again. Right? That's what creates the waves in the market. Okay? Good question. So, orders and employment. New orders declined for the first time in a half year. Job creation slowed to a low not seen in over 3 years. Okay? Job creation. So, organizations, right? We know that there's really 7 main stocks that's really carrying the S&P right now. There's a lot of companies out here that are not doing very, very well. In fact, the majority of them are. Right? So you got 7 behemoths right now, and that's really is what was carrying that uptrend. See, so sometimes you got to do some digging and really see what's really going on. Right. So there's some concerns out there. All right. Inflation and costs. Input cost inflation rose, driven by fuel, wages, and raw materials. Right. How do we produce? Inflation and selling prices cooled down. Backlog saw the steepest contraction since May 2020, right? Talking about demand. Business confidence. U.S. firms became more optimistic about the year ahead, driven by hopes for stable interest rates and more consumer demand and less price pressure. Right? So we saw that we missed forecasts, but overall the business confidence is still there. So you start to think, right? You start to think. See, they looked at this report and said, oh, stable interest rates, price stability, more consumer demand. Okay. Because they're thinking what? Less price pressure. Because they're starting to think what? Pause in rates and then a cut in rates to create stimulus. Right? Some point they're going to pause. They're going to get at these restricted levels. They have to pause and then they're going to cut. So they're looking, what did they say? About the year ahead. Not today, not 2 weeks from now, the year ahead, right? You're talking about big positions. Okay? Globally. So when you think about it, right? So you saw that, and then you look at something, we saw what? The dollar, okay, start to curve off a little bit, right? So you can see we had a bearish day. Okay? We had a bearish day. Okay? So while the dollar may continue eventually on that uptrend, maybe it's time for a breather. Maybe some of the air has to be let out of the dollar balloon, right? So while you see this drop off, you come over here and you come to something like the S&P, right? And you see that optimism, right? With some of the earnings that came out, right? You're waiting on NVIDIA. You see what? We got that break. See that moving? See that moving up? Okay. Look. Yeah. We got that bounce in the market. Market moves in waves, right? We come in and we take a look at something like even we've been talking about Carolyn stock, I believe it was Yesenia, right? Made money off the option, right? She played it. And what were we saying? Man, I want to see if it holds at that 1355 level. We were talking about that in the Discord, and it did. So the downward move, the concerns that came out of China, we see that now as, man, that might have just been possibly a correction, right? Cause price to correct. And then we saw buyers come in, and you can see it held right there, that double bottom. So right now that's pushing back bullish, right? That's pushing back bullish. If we go to like the NASDAQ, okay, we can see it here, right? You guys remember we put that cloud on? And if we zoom out, we came out of the 80-20. Look how that corrected to the low price, and look at it now, right? This is why we say you come to the weekly ritual, or if you can't make it, you do it on your own. Make sure you have your chart set up and let the trades come to you. Yep, tech is making some noise, right? Remember we were talking about yesterday? Hey, everybody's waiting on earnings reports from NVIDIA, tech sector, things like that, okay? And you can see, look at that. Look at the correction. Okay? So for people who may not quite understand that, you might think this is the end of the world. This is doomsday, right? You run around like Robert Kiyosaki and start talking about buying silver, right? Right? Which you should diversify, right? But you start to get all, the panic and it price corrected. And now we're moving back along, right? So you guys remember, like here was set up to play. Right? It found support on your 1 hour, the smaller wave. That was the A. It took it out, but you can see how it was a false break. It pushed deeper into a deeper correction on your higher time frame, but then it got long again. Or like me too early. Yeah, too early and there's a move. Like, yep. And that's how I really adopted the joy, the just the idea of trading small, because a lot of times I'm early in the position and I don't want to get my entire account, tied up. I want to be able to let my trade idea, play out. But some people like it tight, and if they get stopped out, they don't care. They'll just get back in it. They'll keep an eye on it. But that's the NASDAQ. We can take a look at the Dow is still correcting, right? That's still coming down, right? So that's not quite coming around at 382. It's moving sideways on the Dow. We love to see that come down and retest that 32,617 support on that. So that one's still coming down. That was a beautiful play, I think, earlier when we had mapped out all those 80-20s, right? To the point where that took the A out. Look at that, right? Deeper correction, larger wave on a higher time frame, A gets taken out on a lower time frame. Okay, so that 820 came through actually 3 take profit levels, with the third TP level being the A boundary. All right, so we'll continue to still good. All right, so that's that. That's just an example of how these fundamental reports and having an understanding of it, at least so you don't get surprised or shocked by it. Right. So you know when you're swing trading. Okay. I hope does that help? Yes, no? Yes? Okay. All right, cool. Thank you. All right, so that's that. So let's take a look at see, I had the we'll take a look at this dollar Swissy play to see. Now this one on this dollar Swiss on the daily, right? This one is, I am watching this and we'll look at the play that we had, the 80-20 that actually came up and hit the 382 on the 4, I believe it was. But this one is hovering right at this 87.56 monthly level. And we're moving sideways, but we know we've got a little bit of a correction on the dollar. Yeah, I'm thinking I want to see it. I want to watch this one closely to see if this breaks and closes below that 87.56 and continue to watch what's going on with that DXY to see if we get a downturn for a longer period of time. This was the what chart did I might have closed out. Yep. So this was the 382 play that made the swing. Been on the, oh, here it was on the 1, right? So this one took forever, but didn't quite go to that 118, 127 zone, but it finally made its way up. Right. This is like forever ago. So once it came off that weekly support level, it's choppy, but you can see how we moved all the way up over 200 pips. And now we're sitting here at this 382 on this 4, and I think it's going to, second. Somebody let me know if I'm getting choppy or going in and out. My screen's paused. It seems like we're getting thunderstorms again on this way. It's been a rainy summer. I don't know. It was a mini monsoon today here. I don't know what's going on. I don't know what's going on. But it's been a wild one. So here we are at that 382, right? So we hit that target. And now I'm just watching this closely to see if we break back below that. So nothing yet, but just wait. And it may move sideways, okay? But just keep an eye on that one. If it breaks and closes below that level and start making, you start to see those lower lows and lower highs, that may be one that's headed to the downside. You said your power went out yesterday. Yeah, I'm surprised mine didn't go. Usually it does. It's hanging in there, but getting a little some flickering and stuff now. So we'll see. So that's the dollar Swiss. I want everybody to just to keep an eye on that one. The the next one is this this dollar CAD, because you can see here we have been bullish, moving to the upside. Hold on one second. All right, we've been bullish, moving to the upside. We came through, right? We saw this early in the game. We came through. Now we've broken above that 135.04. So the question becomes on these lower time frames. Here on your 4-hour, we've been bullish out of this zone, right? And we've marked up. Okay. Bullish out of that zone, that 50% zone. There's that daily level of 133.86. So the question becomes, how far does the dollar want to correct? Watching oil, we know that's correcting. Do we stay above this 135.04 level? Because if we do, then if we press that 135.04 level and we hold, we're right at a 61.8 on the 4-hour chart. I mean, on the 1-hour chart. Okay. We're right around that zone. So let's just continue to watch things closely. We've got time. Right? You got time. These are swings. Right. So if we get price to push down and hold in this level, you know, in this zone, okay. And then maybe we start to move up, right? So let's just continue to watch and see what type of reaction we get. Has resistance, could be becoming future support on this latest downswing and correction. So watch that dollar CAD. Let's see what we get out of it. I think that dollar is just correcting, and then we're going to get that continuation. Let me see. Reese, I believe you said you're thinking what? 107? I think that's what you said yesterday. 107, something like that. Or you were thinking, I can't remember what you said yesterday. Maybe you gave us some good input. For the dollar, I can't remember off the top of my head. But anyway, so let's continue to watch that. All right. So that's the dollar CAD. Should be interesting. I want to look at this pound Aussie. The Euro Aussie. We'll come back to that too. Let's take a look at the pound Aussie. We can see here that the weekly crown played out. Okay, hit the D extension. We know when we get those higher time frame extensions, we could be due for a pretty sizable correction at some point. Okay, so come down here to the daily. This one came super close, right, to that D extension. Didn't quite get there, just missed it. Okay, so we're moving down now, but we're coming into, keeping in mind that we haven't hit that D extension yet. That's stochastic, right? It's in the sell zone, but we're coming down to a key level of support. So the question is, do we hold? Are we going to hold at this support? It's moved down quite a ways now, right? So if you've been short off of some of the lower time frame plays, it's done pretty well. We've got to watch the support at 195.65 though. Okay, so we got a good catalyst with some of the fundamental data coming out of the UK, but we still technically haven't hit that. We haven't hit that that daily D extension. So just know we're coming into a key level of support. Here we are watching this on the 4. Okay. And we're moving on down, closing in on that. So if we break it, we close below it, we may see a continuation. Okay. So yes, we're bullish overall on the larger swing, but we're in an up retracement zone. So now it's a matter of how far does it want to continue to correct. Right. So look, that is 350 pips. Okay. So we think about it, right? So even if you went up and you were in drawdown, right? Even off that level, off that 127 level, you're at over 100 pips. You're out of the zone, out of the 80-20 zone. Okay. So this is one of the things why we keep focused, because we see technically these setups occurring, but we pay attention to those fundamentals, like what could cause it, right? When it continues to move up and then it stalls, well, what's going to be the catalyst, right? Well, we see, okay, we've got an upcoming PMI data coming out. Very, very important. Maybe we have an interest rate decision that's going to be very, very important. Maybe we have employment numbers. Maybe we have trade balance numbers that are going to be very, very important, that can coincide with our technical setup and cause it to react in our favor. Okay. So just some things to think about. So here we are on the 1, and you can see this is very, very clean on your 1 hour. Okay. So let me right. So you can see it come right out of that zone, right? And this is where we had the markup. So you can see it's down, okay, here, 380, 567 and TP1. Okay. So if you took that setup, take some of the position off the table. We're coming into that daily support that we're talking about. That's going to be a key area, right? If you don't take anything off the table, at least start to adjust your stop, but don't give back 300 pips without securing something. All right, everybody understand that? Drop me a 2 in the chat, please. That is very, very important. You do all the work, right? You've driven yourself crazy, staying patient. Don't give it back, right? We could pull back and continue down, that's fine. But when you've gotten 200-300 pips off of a move, lock it in, okay? Lock it in. All right. Okay, so if you're trading that at 20 cents, 2 micros, take 1 micro off the table. Just to stop the break even, right? Or in profit on the remaining, 10 cents and let it go. All right. Okay. If you're in there just at 1 micro, that's fine. Okay. Yep. 30 something bucks. Move that stop down, close out. Okay. Don't give it all back to the market. All right. So that's the pound Aussie. I want to check in on our pound CAD. That's a long swing off the daily. And so we should have seen some corrective action today off the 1. I'm sorry, that's where we drew that big move. Yep. So we saw the corrective action today and price moved down. But we know oil has been correcting too. So we'll continue to watch this and let this play out. So this is up pretty good, right? We're still up. So now I start thinking, well, we got this push down in this reaction. Okay. So now, do we find, is this going to hold as a support level? Right. Is this zone going to hold and then we're going to see a continuation? Are we going to continue to make higher highs and higher lows? That target was 709 pips away. We've gotten quite a bit, but we know it doesn't just shoot straight up for 700 pips. That's something shocking happens in the market, right? We know that's not going to happen. It's going to move in waves, right? So we ranged, we broke out, made a higher high, higher low, higher high. Is this the higher low? Right. So then it starts, when I think about my trade management, do I look to add to that position if that holds and starts pushing long again? Okay. Whether it be this week or next week. Okay. Sometimes when we get those knee-jerk reactions in the market, price can pause and consolidate for a little while before it continues in either direction. So that's where we are on the pound CAD. Just a quick update on that. But that's still intact, right? That's still within your AB boundary. That's still in your C to D push zone. Okay. All right. That one's been pretty good. What else did I have down? Oh, this pound New Zealand. Okay. We've been pushing pretty long. We hit the D extension a while ago on the daily, overextended, we got a rejection. So if we come down to the 4, find that wave, right? Find that wave. I shut up to our 118 after a shallow retracement, and now we're correcting down. Okay. So it doesn't look like much sometimes, but when you think about it, this is a pound pair that's down over 300 pips. So the question now becomes, all right, do we pull back and we get that continuation down? Okay. So we were just looking at this pair. So if I missed it, do I just turn this into a setup to where I look for a new high price, knowing that I'm playing that 80-20 off the 4? Okay. Knowing that I'm playing that 80-20 off the 4-hour chart. I just wait to see, can I get a pullback on this 1 hour? Okay. Showing up nicely on the 1-2. Do I get a pullback, right? So now I can turn this into a smaller play if I missed that initial move. Do I get a correction into my sweet spot? Can I get a trend line break? Can I get price to start making lower lows and lower highs? Be patient. Why? Because it has a long way to go if it's going to finish that correction. Right? So now you just make this a regular ABCD wave play. We're coming out of a sweet spot zone on our capital fit. Now I could just utilize this here and make it smaller because price is moving in that downward direction. So here, stop to be above my A. If it pushes up into my zone, then I can look to potentially short it. I start to get price to sell off. Boom. Right. So let's continue to watch it, see what happens. Again, if you're in this setup, just secure the bag, right? Probably should have already taken something, right? When you get a move that big, you held it, right? If you got in at the 80-20 zone, you dealt with some drawdown, right? Now you're in profit. Manage your trade. Manage your trade. Okay. So if this pushes to a high price and makes it back to the 382, we'll put it here on the 1-2. Put some TP levels for this 1 hour. Right. TP1 is there. So if we push up and then we continue our decline, that's still 470. Right? So it's still that move, that 80-20 is gonna hold. It still has a ways to go. So we'll continue to we'll see. We'll see what happens. Any questions on this pound New Zealand? All right. Good deal. I want to take a look at I didn't have it down, but let's take a look at this pound again. Monthly extension hit. Same stuff over and over. Okay. It's a pattern driven market. It really is. Monthly D extension, we formed a daily high now. Okay. 236. All right. Retracement. This one made a decent correction, right? But we hit a higher time frame extension. So now it's like, okay, is that going to hold? Right? See how we already had that 382 and it pushed up, but we ran into, a higher time frame extension. Higher time frames control the lower time frames. So do we get a further decline? Maybe we get back, maybe we make it back to, right, the trend line to retest the trend line on it. Okay. But you can see it's declining. So here we are. Look at that on the 1. What do we think about this 1 hour play? we are forming. I just saw that. So we're forming, we've got a 4-hour low here. That's a 4-hour low. Okay. Flag. Okay. It's 4-hour low. Somebody talk to me. In what scenario would you buy this?
I will wait to see if it's gonna take out that A or not because the stochastic is in the overbought section.
Okay. Like it. Reese on it. I was thinking the same thing. A break above 184.52. Hold on one sec. All right, everybody. All right. That's what I'm thinking, Reese. A break above that level. All right. We shall see. Let's see how that plays out. All right. But we know we've got some downside pressure on the pound as a result of the data today. We know we're sitting pretty high here. That's in the sell zone. So I wonder if it'll move back up to retest a high, or if it's just going to be a short correction and then continue down. That one's going to be interesting. But that one caught my eye, sitting pretty low in the zone on the 1 hour. Right. All right, that's that. I want to take a look at the quick look in at the pound dollar, kind of just sitting around. So if we come in and take a look at this 4-hour picture, we're just stalling out now. It's been a huge move. Okay. Once again, right? Our 80-20 zone out there, shallow retracement. Okay. So this is doing this is doing absolutely nothing right now. So that's 40 pips to the downside out of that zone. So again, if you're in it, secure the bag. We're moving sideways, which often occurs when you get a huge move to the downside like that. Stalls around, it stalls. There's a fight going on, right? Between your bulls and your bears. What to do next? Which direction are we gonna go? All right. So make sure that you secure the bag if you took that position. Okay. All right. It's been a big one. Okay. It's been a big one. It's run for a long time. But we're stalling now. We're moving sideways. Okay. So that's the pound dollar. Okay. And I want to take a look at check in at the Euro Aussie. Get the progress that it's making on this correction. Okay. So again, we're making our way out of the zone. See if we can get that TP2 target. So out of that zone, we're already down. Pretty good. Okay. Over 200 pips. Okay. Daily D extension got a hit. We know we've got fundamental data that came through that's negative for the Eurozone. Okay. We've got a correction in the market. Oh, so there we go. So we're moving down. And we were talking about last night how on a higher time frame, if it continues for a deeper correction, it's going to take this A out, and you can just look at it like this, right? So if you're playing that TP1 from that 4-hour chart, there's the move. We didn't get, I was thinking we would get a correction, but we didn't get it. We had that drawn up last night to see if we can get price to come off that 80-20 zone on this sub fib, but it didn't give us a high price. It just kept moving short to the D extension. So now we'll see if we eventually get that correction, but then a continuation down. Right. Like so. Same stuff over and over and over again. Put the work in, set your charts up, let it come to you. Any questions on the Euro Aussie? So you can see across the board how a lot of these pairs that have been on some very, very strong rallies are now correcting. Right. So if we go to something like, we go to investing.com and we go to our technical summaries and we look at the Euro, right? You can start to see the shift from the lower time frames, right? So you can see how long-term, right, is been a really good rally. This has been short for a while because of the strength in the Swissy. But you can start to see how you're starting to get things to U-turn a little bit on a lot of these pairs, like the Euro Aussie, how it's correcting now. Okay. So we're in an up retracement zone, right? This one has just been pulling back in pairs. That Swiss franc has been a monster. Okay. So sometimes you could do that. So if you go in and right, you customize it, and we could do something like do our pounds, right? And we put these in the newsletter, right, to show you what happens, what the technical summaries look like at the weekend. CHF. USD. Okay. Put in Euro GB. Okay. And you can see what's starting to happen. Okay. The price is corrected. Okay. But you can see how strong that Swiss is across the board. Right? That's why we post this in that newsletter, right? So you can kind of see what's going on, how it's trending technically. And you can start to pinpoint like, okay, this Swissy is pretty strong. Right? You start to see when you look at it, sometimes you'll have a summary where you're seeing buys across the board when you talk about these pound crosses, but then you have a one pair, right? That just continues to, this is the counter currency, your Swissy, and you can see it selling off against it. The pound is selling off. You saw it with the Euro. You'll see it with some of the other crosses. It's like, okay, the bully in the room right now is the Swiss franc. Okay, so it kind of gives you an idea what's going on with some of these technical summaries, combining moving averages and other, common indicators that are used, right? Which is why I don't put a lot of indicators on my chart, because I could just come look at the technical summary, right? Kind of get an idea of what's going on. All right. Any questions about that? No. All right. I didn't. I did get a chance. I'm starting to get some big time delays. Didn't get a chance to go over the UJ. Okay. So we can see how, right? PMI manufacturing data. We're looking at past resistance becoming future support. That's how we marked it up. So I'm interested to see if we get a little bit more correction on the dollar, if it'll push it down to retest this level, right? Before continuing long. But this has been a good mover so far. So the original setup was 1,380 pips. It's moved quite a ways, right? So just continue to look for opportunities either to, if you haven't been involved in it at all, just continue to look for opportunities to potentially get a position, right? Your first position on it, or add to your position. So here's past resistance becoming future support brought down from the daily. So maybe we're retesting this 145.07 now. Maybe if we get one more drive down, right, it'll come into a sweet spot and we can actually look to add a position or get long. All right. Any questions on the UJ? All right. Nope. Okay. All right. Got a few minutes left. Any pairs that you guys want to take a look at? Anybody eyeing any particular setups other than what we've already been involved in? Euro Swissy. Okay. Take a look at it. All right. Yeah. I don't know, Joy. With that pressure today. All right. I'm gone. I had adjusted on that one. Don't know. That data that came out today, I thought we were getting ready to get that good U-turn. So that one might come. That I'm gone already on that because I adjusted and moved up once it started to move a little bit further in the zone. So I'm out on that one. Are you still holding that one?
I don't know. I haven't checked that chart.
Haven't checked the chart. Yeah. Yeah. You never know. It might, you know, give a push to the upside before hitting that D extension, which is where I got that original stop drawn up at for 80 pips. But I adjusted it once we got that pullback and that correction and got a sub tip going. I moved mine up. I didn't let it float. So I'm out on that one right now. So we'll continue to watch it. Stochastic's back in a buy zone, so it may continue. Maybe look for another opportunity on it. So that's where we are on that one. That Swissy's been strong, right? It was already it had gained some strength because of what the S&B was doing, but then when the market risked off, that's a safe haven. So, yep. And then with the data today too, you know, more concerns. Any other pairs? Nope.
Yes, gold. Sorry,
Oh yeah.
I couldn't find the unmute. I'm like, gold.
Hold on one second. Let's take a look at. We take a look at gold and oil. Matter of fact. Let's go. All right. So here we are. Okay. That's why I'm back in hell, right? We were looking at this potential double bottom. It pushed lower, but look at it now. All right. So we were saying during the ritual, right? You may start to see an uptick in gold but mine was more so on the concern out of China. But this is the old 80-20 setup. I never reset this. Right? I put the fibs on it, but I didn't set up the targets. Right. So we've got because it's looking at it mainly from that daily potential double bottom. But that's all coming in line though. So basically, off the heels of that data, we look for corrections and continuations to the upside on this. Okay. That's clearly an inner trend line break. Okay. Because you remember, price took the A out, so we flipped the fibs to run them to the downside. And we got good confluence there, but I thought that was going to continue to push, I'll be honest, once it didn't hold up. So it broke and then it U-turned. That one fooled me. Right? Once this level broke, I thought it was a goner for a while. But hey, just like that. So we can look for, potential pullbacks, lower time frame. This is the one. It's nice. That was that crown for a long time. I see none of that held. I'm thinking like, this is gone. Right? Didn't hold at that level, broke that level. We got a U-turn. Glad you called this one out.
I was thinking maybe if it comes back to 1900, I was like maybe,
Oh yeah, right back to this level.
and then to add to it again. But let's
Yeah,
see.
that's not a bad idea.
I just marked it because that would be in the, yeah, like down here. Yeah.
Mm-hmm. Like that. See if we can get a correction to retest the level.
Yeah, because on the higher time frame, I was thinking like when I posted it, I was like maybe it will go down and retrace deeper on the daily to the 786. And then
Yep.
I was like, I don't know. I was looking at UJ. I was like, I don't know. Like I feel like the dollar is due for a little. So I was like, let me just see. And it ended up working out. So that was good.
Yeah,
Because
that's good.
it was going down for a minute. I was like, oh, okay.
Well, that's what I thought. You see all those bearish candles, and when it broke to
Yeah.
that level, I'm like, okay, double bottom is out of the question. This is about to keep rolling through the zone. Yeah, like you said, maybe it drops to that 786 level, but
Yeah, that's what I had marked up on my chart. I was like, all right, if it comes over here for sure again. But
yep.
then I saw the push. I was like, oh, okay. But then I got out because I was like, yo, I was like, wait, let me just play it to the beat.
Yep.
I think it was the 4 hour. And then I was like, all right, let me just chill. And if I see that it comes down and retests 1900, then I'll probably go in again. But I was like, wait, let me just be safe about it.
Yeah. I'm glad you kept your eyes on it, because when it broke that level, I was like, this is a wrap. And
Where's
the
your
dollar,
support and resistance at?
huh?
Your 4 hour support and resistance on this one.
This is the daily, so it won't be on here. This is the new daily support though. So hold on 1 second. Yeah, I don't take my lower time frames levels up. I'll bring everything down. So let me but this is a new daily level there. I completely took my eyes off of it. This is what I saw. So what would be that 4 hour support is a daily too, if you're coming from the top down. Man, that ripped right through those levels. I'm definitely liking that idea, right? That pullback, and maybe it retest that 1924 first. You never know, man. It's been a crazy year in the markets. I'm not gonna sit up there and say it's been an easy ride. Like it's been a lot of back and forth, which is good to learn from those things. That's way overextended. That's like a rocket ship right now. That big bullish candle. At some point it'll pull back. Hopefully before it gets to that 382 target. But I mean, that's just looking at it from the 4. If it, man, right, things really starting to tighten. We get more data like we saw today. You start to get concerned. You know, you may continue to see that to move up. Gold is a good hedge against inflation, and inflation. I mean, U.S. core inflation still has some work to do, but overall it's been coming down. Some of the reports that we looked at today, right, with the PMI, some of the data in that reports were saying some of the inflation in some key areas was coming down. So this was going to be quite interesting to watch. But right now, technically, that's found some support and it's taking a ride. Stochastics in the buy zone on the daily, and it's come down to that 61.8 area. So long it is for now. Good stuff. All right, so let's take a look at oil real quick. And he's posted a monster setup in the Discord. If you haven't taken a look at that, it's a beautiful technical markup. And so you can see how we're correcting, right? Moving to the downside. Close below that 77.84, right? You see right here. Past resistance becoming future support. Close below that zone, we may see further declines. That didn't hold. That was kind of like gold. I can get that out of there now. I was eyeing up a possible double bottom there too. Nada. All right, coming right into that 61.8. See what happens. I think it definitely eventually pushes higher because of supply constraints. We know we've got some concern on demand coming out of China because of what's going on economically, but I think still overall, right? That doesn't mean you don't have demand elsewhere around the globe. I still think it's going to move up. Just how far does it want to correct for making that U-turn? So it's taking back 61% now, 61.8%. We're sitting at that support. Right? This is almost identical to what happened with gold. Pushed down a little bit lower and then it held up. Almost the same price action pattern. Even though that was from the daily chart. We'll see. Any questions on oil? Order at 76.16. All right. All right. Well, hey, we're gonna wrap things up for tonight. Hope those notes help. We're gonna keep those notes coming. I have to tag a link on those because I actually did those not too. It was getting pretty close to our session starting, and I knocked those out. So I still have to, convert them to a PDF and put a shared link on them. And I'll make sure I put them in the Discord for everybody. Okay. So hey, tomorrow 6:30 a.m. Eastern Standard Time with my awesome partner, Mr. Ryan Carthage. We'll be up early. We'll be looking at the chart. So hope to see you all tomorrow morning. Have a good night, everybody.